Somewhere near you, there is a vending machine, a storage unit, a parking spot, or a small piece of software quietly making someone money right now while they sleep, work, or travel. You walk past these things constantly and never ask who owns them or how they started. You assume it took a fortune. It usually didn't. In this video, you'll see 8 ways someone named Sarah could slowly build real passive income using just $250 a month. The first 5 ideas are simple and often overlooked. The last 3 are the ones almost nobody talks about, because they turn small, boring assets into income that keeps growing even when Sarah isn't working at all. And number 8 might surprise you the most, because Sarah isn't selling a product or a service. She's selling access. Sarah has a steady job and a normal paycheck, and for years she believed passive income was reserved for people who already had money to spare. She pictured landlords with entire buildings or investors with 6-figure portfolios, and assumed there was no version of that world with her name on it. Then she looked closely at her own spending and realized $250 a month was already slipping out of her account on things she barely noticed. The problem was never the amount. The problem was that her money had no job to do. Sarah didn't need a windfall. She needed one small asset that could earn money without her standing next to it every day. Before the list, here's the filter Sarah uses to judge every idea. It has to work with little ongoing effort once it's set up. It has to earn money on a schedule, not just once. It has to serve real, repeat demand instead of a one-time sale. It has to be simple enough to start small. And it has to keep paying her even on the days she does nothing at all. Once Sarah understood this filter, ordinary things around her, empty driveways, unused closets, quiet corners of the internet, started looking less like nothing and more like income she simply hadn't collected yet. Idea 1. Renting out a parking spot. Sarah lists an unused driveway or parking space near a busy area, a stadium, a downtown office, or a train station, on an app built for parking rentals. The $250 covers a sign, a simple lockbox, and a bit of marketing. Parking in busy areas is expensive and scarce, and a private spot solves a daily headache for commuters and event-goers, so the money comes in as a flat monthly fee, whether Sarah is home or not. People overlook it because a driveway looks like dead space instead of a monthly asset. Check local zoning and HOA rules first. Keyline: Sarah isn't renting concrete. She's renting the 10 minutes someone would have spent circling the block. If she sets up 2 spots at $120 a month each, that's $240 a month with almost no ongoing work. But not every idle asset sits outside your home. Some of it sits in your closet. Idea 2. Peer-to-peer equipment rental. Sarah buys tools, cameras, or party equipment that people only need occasionally, and rents them out by the day. One solid item, like a pressure washer or a projector, is enough to start, since buying equipment for a one-time job rarely makes sense for the renter. Money comes in as a daily fee through a rental app or local listing. It's overlooked because people assume this needs a warehouse full of gear, when one good item works. Watch for wear and tear and late returns. Keyline: Sarah isn't selling equipment. She's selling 3 days of use to someone who only needed it once. A $250 pressure washer rented 10 times a month at $30 each brings in $300 a month from one item. Idea 3. Buying a small content website. Sarah buys a tiny, already existing blog or niche site that earns a little from ads or affiliate links. Since modest sites sometimes sell for a few $100s, advertisers pay for traffic, and readers keep visiting because the content already solves a problem for them, so the income arrives automatically each month. People overlook this because they assume you have to build a site from scratch. Check the site's traffic history before buying, since search engine changes are the main risk. Keyline: Sarah isn't buying a website. She's buying a small crowd of readers who already show up every month. A $250 site earning $40 a month in ad revenue keeps paying with almost no daily effort. Idea 4. A small vending machine route. Sarah places 1 or 2 machines in break rooms, laundromats, or small offices. The $250 covers a used machine and the first month of stock. People want quick snacks nearby, and business owners like offering convenience without managing it themselves. So money comes in through regular cash or card collections. It's overlooked because people picture vending as something only big companies run. Get permission from the location owner first, and watch for low foot traffic. Keyline: Sarah isn't selling snacks. She's selling convenience to someone who doesn't want to leave the building. A first machine netting $150 a month becomes the seed money for a second one. Idea 5. A self-storage unit sublet. Sarah rents a large, cheap storage unit, divides it, and rents the smaller sections to people who only need a little space. The $250 covers the first month's rent before the sublets start paying her back. People often need small amounts of storage and don't want a full unit, so several smaller monthly payments add up to more than Sarah pays for the whole unit. It's overlooked because people rent storage for themselves and never think to sublet the extra space. Check the facility's subletting policy first. Keyline: Sarah isn't paying for storage. She's turning one rented box into 4 smaller ones that pay for themselves. 3 sections at $110 each bring in $330 a month, with the unit paying for itself and turning a profit. Idea 6. A dividend-focused investment account. Instead of a physical asset, Sarah puts her $250 a month into dividend-paying stocks or funds. Companies share profits with shareholders regularly, and reinvesting those payments compounds the account over time. So money arrives as deposits Sarah can spend or reinvest. It's overlooked because people think investing only matters once you already have a lot of money, when consistency matters more. Watch fees, dividend history, and market downturns. Keyline: Sarah isn't buying stock. She's buying a tiny slice of other people's profits, delivered to her every few months. Invested steadily for years, the account can eventually pay meaningful dividends without her touching the original savings. Idea 7. A simple digital product on autopilot. Sarah creates one useful digital product, a template, a guide, or a small tool, and sells it automatically online. The $250 covers basic software, a simple website, and early advertising. A good digital product solves a specific problem instantly without Sarah present, so payments arrive automatically with every purchase. It's overlooked because people assume digital products need a huge following, when a small, useful one can sell quietly for years. Watch for competition and the product going out of date. Keyline: Sarah isn't selling a file. She's selling the hours someone else would have spent solving the problem themselves. 15 sales a month at $20 each brings in $300 a month with no extra work per sale. And now for Idea 8. Selling things entirely and starting selling access. A private community or newsletter membership. Sarah builds a small focused community or paid newsletter around one topic she understands well. The $250 covers a platform subscription and basic marketing to attract the first paying members. People are willing to pay small monthly fees for focused, reliable information instead of digging through free content, so money arrives as recurring membership fees. This is the strongest idea because once the community has value, it grows through word of mouth, and the income compounds instead of resetting every month. Watch for member churn if the value feels thin. Keyline: Sarah isn't selling information. She's selling a room that people are willing to keep paying to stay in. 20 members paying $15 a month brings in $300 a month, and it tends to grow rather than shrink over time. The real lesson here isn't that $250 a month makes anyone rich overnight. It won't. The lesson is that small, consistent money can buy small assets. Small assets generate recurring income. Recurring income gets reinvested, and reinvested income compounds into something much larger than the original $250 ever suggested. Sarah stopped asking whether $250 was enough to matter, and started asking what small asset that $250 could buy that would keep paying her long after the initial effort was done. Let's be honest, every one of these ideas can fail. People fail because they pick a bad location, skip basic research, or expect results in a month instead of a year. They fail because they buy everything up front before testing small, or because they assume passive means effortless from day one, when it really means effort up front and ease later. Boring does not mean easy, and slow does not mean weak. Execution and patience decide whether any of this works, not the $250 itself. At the start, Sarah believed $250 a month was too small to matter. Now, she sees it as a quiet, repeatable tool. Every month it can buy one more asset, fund one more test, or grow one system a little further. She didn't need a huge idea or a lucky break. She needed to start one small, boring asset at a time. If you want a follow-up video breaking down exactly how Sarah could start one of these ideas step by step with only $250, comment passive income below. Like this video if it changed how you think about small, steady money, and subscribe for more lessons on building real income out of ordinary things. Because $250 a month won't build an empire by itself, but with patience and the right small assets, it can quietly grow while you sleep.